How's it going, everyone? It's Sam. Michael Saylor had laid out 3 different things he wanted to see to have Bitcoin hit $5 million. The third thing just got announced today. It's just over the last hour. It's a big piece of news. It will take a little while for things to fall into place where it starts affecting the price of Bitcoin, but this is a massive catalyst for the long term of Bitcoin. Now, we also have some news about M2 money supply, which is freaking awesome. I love what I just saw. And some news about interest rates, which we'll talk about later, something that Fed governor just said. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this. Also, if you are bullish and you want to put on a trade, there's a link to Margex underneath the video. You can long or you can short. You can make more long positions or short positions by going lower leverage, or you can be more aggressive if you're trying to play daily swings with higher leverage. There's a big airdrop as well on Margex where you can get up to $5,000 for free just for trading. So check that link out underneath the video. It'll be the top link. Also, if you didn't know, Flappy Bird is back. I actually have a link to that underneath the video too. They're not sponsoring this or anything, but I do have my name as a community that you can join there, My Financial Friend. If you play, please hit that so that we can get more points. I want to climb up that leaderboard. Not sponsored, but I do want it for bragging rights. Now, I want to talk later in the video too, after we play some important videos and also after we hit on some news. I want to talk about a trade that I made earlier today to give a little bit of clarification on it, where I actually sold a very small amount of my Bitcoin for Ethereum. So we'll talk about that later. Just know I'm extremely bullish on Bitcoin. It was a small amount, about 1%, that I sold to put into Ethereum. And this was actually some of the bag that I was going to actually trade this cycle as well. This is part of my taking profits back. So we'll talk about that later in the video, but take a look at the news that just came out. Credible rumors are circulating that one or more major banks in the US will soon be able to custody Bitcoin. HODL 15 Capital says this is not priced in. Now, he refers to this article. BNY Mellon is identified as the first bank to receive SEC exemption from SAB 121. If you remember, this was a big thing that happened maybe a year ago or so. It's hard to keep track, but the government's basically just said banks cannot custody Bitcoin. The U.S. government said that, and there are some exemptions. Apparently, it was revealed in a speech that the SEC, or the government body that controls this, had granted some exemptions to SAB 121, mostly finding that the rule did not apply to certain entities if they met certain conditions. It came out that it was basically BNY Mellon. They can provide institutional custody of digital assets. Now, this actually happened Monday. Interesting thing about this is Monday was the day that we went and started to rally up, right? Like we started to rally into Tuesday, Wednesday, Thursday. Then today we're a little bit sideways, maybe a little bit down even. But this is big news, and it's something that a lot of people didn't pay attention to, didn't notice. But Michael Saylor's actually talked about why this is so important and why this will actually help take Bitcoin to 5 million. I'm going to play this for you, and then we'll talk about why institutions would even want Bitcoin in the first place, actually referring back to a different Michael Saylor clip. But this is where he says that this will take Bitcoin to 5 million or help it. And just to be clear, banks custodying Bitcoin basically just makes it so that it's safer, right? A bank custodying it for an institution means that they don't have to take on that risk themselves. They can just say, hey, yep, we want another 10,000 Bitcoin, buy it for us. It doesn't have the same fee structure as like a Bitcoin ETF. And there are certain ways to do this too. I'm sure there are certain restrictions where certain companies can't buy ETFs, but they can hold Bitcoin. So let me play this for you, what Michael Saylor has said here.
I think there's 3 reasons. Look, first of all, it's going up by a factor of 10, whether they fix any of this stuff, right? It's going to go it's going to be a grind up by a factor of 10 just because gold is broken and Bitcoin's going to replace gold. And now everybody in the universe knows they need a non-sovereign store of value in the form of a bearer instrument. So now they're looking, the amount of stories. For last year, people said inflation may be coming, we're not sure. Now the mainstream narrative is flipped to inflation is here, you need an inflation hedge. So it's going to grind up to replace gold. It'll go to $500,000 a coin, regardless of whether they fix these things. But there are three things that are massive catalysts that cause an acceleration. And I don't think that those three things don't take us to 500,000. They take us to 5 million a coin, right? Those three things are a spot ETF where someone can go ahead and buy $100 million of Bitcoin, buy a security, an ETF security. I think that's one. Two is your bank is going to custody it for you and lend against it. And three is I can mark it up or mark it down on my balance sheet based on fair value. Pari passu. It'll be pari passu to the way I'd handle Apple stock, or at least that good. If you have property with fair value accounting, by the way, it becomes pari passu to the way you'd handle treasury bonds on a treasury balance sheet. Treasuries are better than stocks because treasury is property, whereas a stock is a security, and you're capped out at 40% of your balance sheet as security. So it would be a major, major breakthrough if you saw any of those three things. And I'll end with this one observation. I tweeted this last week, but I think it's very powerful. It's if the banks can hold this stuff on their balance sheet, then a whole new class of investors are going to buy it. People are going to put in billion and multi-billion dollar orders to buy it as a treasury asset. Nobody's going to sell it because there's no reason to sell it if you can borrow against it at LIBOR plus or SOFR plus 50 basis points, right? So you'll be borrowing against Bitcoin at SOFR plus 50 or SOFR plus 100 basis points. No one's ever going to sell it. And then, as I joked, you won't be able to afford it. I mean, you will be able to afford it, but everybody gets Bitcoin at the price they deserve. When the banks normalize it and you can draw a $100 million credit line at 100 basis points from an FDIC insured bank, at that point, right, we're going to blow through the market cap of gold by a factor of 10.
Right.
So, I think the best thing is those three things are highly likely to happen. I don't know if they happen in 36 months or 24 months or 12 months, but I would be shocked if it's more than 36 months. And I hope, guys, it doesn't happen in 12 months, because my view is the longer it takes, the more progressive the grind, the more time I have to buy more of it.
And I think right now, if I'm not mistaken.
Okay. So giving a good point, hey, if we can start using banks to custody, then you can actually start taking loans against your Bitcoin. So right now, he actually refers to the SOFR rate. Be careful about typing that in. It might autofill to something else. But the SOFR rate is right around 4.82% today. So you could get a loan for maybe 5.32%, which is, that's honestly lower than what you get for something like a mortgage even, right? You could have $1 million worth of Bitcoin, get a loan for, I don't know, 200,000 at an interest rate of 5.32%. Now, of course, every institution is going to approach it differently and every situation is going to be different, but you can see why larger entities may want to do that. And this is tied into something that Michael Saylor talked about recently, and that's why a person or an entity might want to hold Bitcoin, and that's because it can last a lot longer than other financial assets. Let me play that for you, and then I'm going to talk about something else too that's inflation related and why I sold and bought something recently.
And so here is an important equation. This is useful life is equal to the value of an asset divided by the cost to maintain that asset. If you're looking for the useful life of your money in an asset, then the way to figure it out is ask, how much does it cost every year to maintain that asset in pristine condition? What do I have to spend in order to avoid depreciation or decay? It turns out that useful life, is very close to something we know in the Bitcoin community as stock to flow. They're very related if you're measuring them in years. Many individuals and most corporations, they use financial assets to preserve capital. And this is the source of a challenge for us. Let's talk about financial assets. I want to keep my money for a long period of time. Start with $1 billion, put it in the peso, and the money is decaying in 2 years, right? A 98% inflation rate strips you of your economic energy or your capital. This is not a good long duration asset. The Turkish lira, your capital lasts 3 years. The US dollar, under traditional monetary inflation for the past century, might last 14 years, but it's not like you have it for 14 years. The life is being sucked out of you linearly over the 14 years. Put your money in a hedge fund. What's the annual cost? It's 2% management fee and then 20% of the upside. About 4% a year if you're investing in normal assets. That means it's a 25-year asset. Treasuries, you're going to get a yield, but the 3.5% after-tax yield goes against the 7% monetary inflation. Maybe your money lasts 30 years. Capital in a mutual fund where you pay a 1% fee, 100 years. That's about the best you're going to get. If you manage to buy a diversified portfolio at 10 basis points, the counterparty risk is going to drive you to a 1% cost. So those are your financial assets. We're running the world on a 20th century set of ideas, and on average, a financial asset is going to last you 30 years. We all know inflation dilutes the value of financial assets. But inflation is just the tip of the iceberg. You're also going to get diluted by tariffs and tolls and torts and transfers, taxes. We got all sorts of taxes, income tax, capital gains tax. Every time you vibrate, move the money, you get taxed on the money. And then if the taxes don't take you and the torts don't undo you, you've got weather and competition and obsolescence and politics, catastrophe. Those are the things that dilute the value of your capital over time. And if you want to maintain economic energy, you have to fight against that friction. Well, most people realize that's a frustrating endeavor and it's a no-win endeavor. So they give up on financial assets and they start turning to physical assets to preserve capital. Well, here's the physical asset, a Ferrari. Not a good way to keep your money forever, though, because after 5 years, you've spent as much on the insurance and the upkeep and the depreciation as it's worth. Yachts aren't much better. If you spend 10% of your money operating it, you also get hit with depreciation. Don't store your money in yachts. A home in Miami Beach, if you buy a $10 million house, you better come up with $10 million to maintain the house over 17 years. Now you've got no money left. Silver, 22 years. A warehouse, 40 years, maybe 50 years. Bar of gold, 62 years. A painting, 72 years. Land, the average property tax in the United States is 1.1%. That means your money is going to last 91 years unless the government reassesses the value of your property. Then it's going to last less than 91 years. The oldest family ranch in the United States is King Ranch. They made it 173 years. Every other family in the country failed. And here's the longest held property, the Crown Estate in the United Kingdom. You could say the royal family held it since 1066, but on the other hand, it passed from the Plantagenets to the Stuarts through the Lancasters and the Yorks and eventually found its way to the Hanover family. And so maybe 7 different families split that. None of them got to take it with them. So physical assets you might think might last 1,000 years, probably about 50 to 75 years is the best you're going to do. Entropy is diluting the value of your physical assets. It's sucking the capital, the energy out of them. There's a reason it's called earth and not heaven. Because politicians are very creative. They got a city tax, a county tax, a state tax, a federal tax, a transfer tax, a usage tax on the property. And if that doesn't get you, there's rent control, price control, or a culture shock. Then you got competition. You might get discriminated against. There's recession. The currency can collapse. Your tenants won't pay you. Someone will slip and fall on the front sidewalk and sue you. There's weather, war, crime, and catastrophe. And if energy prices go through the roof, it's going to be hard for you to make a go of it. Physical capital is not a simple solution. Something I learned at MIT, the 3 laws of thermodynamics. You can't win. you can't break even. But you can't get out of the game. So you could stop right here and be a little bit depressed. But then again, we don't want to lose. So you start thinking, what if we could find a way out of the game? Well, then we could break even. Then you could win. Satoshi found a way. He gave it away. And he went away. And that's Bitcoin. Bitcoin is digital capital. That's what he created. Bitcoin's immortal, immutable, and immaterial capital. And I use that in this sense. It's got an infinite lifespan. It's not being attacked by the forces of weather and entropy and inflation. It's immaterial in the sense that it's not in the physical world. It's not suffering from all of those parade of horribles that are the scourge of financial and physical assets. And it is the solution to our economic dilemma. The transformation of our capital from financial and physical assets to digital assets, it solves the problem that we're all facing. Now, how long-lived is Bitcoin? Well, take your Bitcoin and put it at scale with a custodian, an institutional-grade custodian. You pay 10 basis points. By the first law of money, that means you're going to last 1,000 years. The custodian might not last 1,000 years, but that doesn't matter because you can move the Bitcoin every year or every decade, and you can stay one step ahead of the custodians failing. You can't teleport a building. You can't teleport the King Ranch, and so Bitcoin is that thing that you can move. Say you custody your Bitcoin. You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good hardware wallets and signing devices and spend a day a year to keep track of it. Now you've got a 10,000-year asset. And what happens if you give it to the AI? Well, an AI or a computer program can maintain those private keys for the cost of electricity. You've got a 100,000-year asset. The AIs are going to want the Bitcoin. If they have a choice between owning the Bitcoin and owning the ranch in Texas or owning the bar of gold or owning the Argentine peso, it's pretty obvious what they're going to want, and you can see here why they're going to want it. Digital assets are in a class all their own. When you compare them to all the other assets that you can use for capital preservation, you can see they're off the scale. Everything else is living in the domain of 30, 40, 50 years, and you're in the domain of 1,000 to 100,000 years. It's a breakthrough in capital preservation, but it makes it a revolution in economics. If you would be rich, trade wisely. And here's a very simple principle. Trade temporary for permanent. Trade your ice cream cone that's melting for the peso for the dollar for the land, and the land for the Bitcoin. Trade the currency for capital. Trade something fragile for something resilient. Trade something local for something global. Trade something physical for something digital. Trade the security for the commodity. Trade the commodity for the scarcity. You can't go wrong moving in that direction.
So now you can see why some institutions or some companies might want to hold Bitcoin. It's a better store of value long term because it doesn't get all those different fees, and it actually holds up against the US dollar and exceeds the US dollar over time because it's not being inflated away. Now this is pretty cool. Global M2 just broke a new all-time high of 91.03 trillion. Bitcoin will follow like a liquidity sponge. That's awesome. I mean, global liquidity, US liquidity, M2 money supply, that all ties directly into the price of Bitcoin. When there's more liquidity, a lot of it tries to find a home in something like Bitcoin, which is a scarce, desirable asset. It also finds homes in other riskier assets as well, like Ethereum and Solana and those types of cryptocurrencies as well, real estate. But this is awesome for cryptocurrency holders. Nick T says Fed Governor Chris Waller tells CNBC that the August inflation numbers last week suggest core PCE rose by 0.14%. If you annualize the last 4 months, that leaves inflation running at less than 1.8%. The inflation data we got during blackout pushed me in the direction of favoring 50 basis points. He says 50 was really the right number. He pushes back against questions over the end point of all this. The committee sees a lot of room to move down over the next 6 to 12 months. That's really what we should be focusing on. Okay, so coming out strong, saying, yeah, we have less than 2% inflation, kind of pointing back to what Jerome Powell had said. We're really focused on the labor market. That's kind of what he's getting across there too. So I think rate cuts are going to continue. Now, as I said this morning, I actually made a trade. I actually sold a small amount of my Bitcoin to buy Ethereum. And part of that is due to where Ethereum Bitcoin valuation is. Part of it is due to the fact that we are starting to get into a time where we're going to have higher liquidity, which typically helps like riskier assets. Now, I realize a lot of people had a lot of strong feelings about that. Keep in mind, I've still acquired a lot of Bitcoin over the last couple of years, right? I'm way up on the stack. And what I sold today was actually part of my trading, right? And part of my profit-taking Bitcoin, I should say. So during this bull run, I'm going to sell. I'm going to sell all my alts, and I'm going to sell half of my Bitcoin, give or take. I've said this for multiple years. That's my goal. Now, of course, depending on how quickly we move and depending on the prices we go to, maybe I'm going to change that slightly, but that is the plan right now. So half of my Bitcoin is sellable. And I know it's difficult to believe, but selling is actually the hardest thing to do in crypto. People think, oh, it's so hard to buy when the market's down. What's harder is selling when the market's moving up, or selling just in general. Swapping is very difficult emotionally, because then you have something that you sold that could go up in value. But at the end of the day, I want to flex that selling muscle, even on something as beautiful as Bitcoin, even on something I think is going to go up even further. Most of my sales this cycle for Bitcoin are going to be below its top price, right? Some are going to be after, some are going to be before, but most of them are probably going to be before. I realize I'm going to feel stupid. I'm going to feel uncomfortable the entire time that I'm selling. And I fully believe that after I sell, Bitcoin's going to continue to move up in price. But again, it's a muscle that you have to flex. You have to get used to selling again. So swapping some Bitcoin into something like Ethereum that seems like a worse asset right now that's been performing horribly. The fact I'm getting some flack on it tells me this is probably the right thing to do. This also will be something where I plan on selling this Ethereum off this cycle anyways, right? So the fact that we've seen it fall down 56% versus Bitcoin, I think we're going to have a rally. I think this is a key area of resistance that we've seen multiple times before in the last bear market. Not this bear market, but the previous one, 2019, 2020. I think we're going to see a rally, especially with liquidity jumping up, with the DXY falling down, with more rate cuts. I think Ethereum will actually perform pretty well. And even if it doesn't, I think we have to stay analytical, even about assets that we feel so strongly about, like Bitcoin. If part of your goal is to take profits this cycle, which that's part of my goal, right? I want to buy more real estate. I want to set myself up and diversify a little bit outside of Bitcoin, because honestly, I accumulated a lot during the bear market. And since it's performed so well, it's grown to be a large part of my portfolio. I'm going to keep some forever, but I'm also going to sell some. And I fully realize that it could go up forever afterwards. And in that case, I'm still happy because I still have a significant portion of my Bitcoin, but also I can diversify into other assets as well, which helps me with volatility, helps, in bear markets, it helps me so I don't have to sell any Bitcoin either. if my business gets taken away, or if you lose your job or something, it's important to have some kind of liquidity, some kind of cash flow, which is part of my reasoning. Let me know, though, if you still think I'm crazy down below in the comment section. I appreciate it. I know some people are bullish on Ethereum. Some people are, bearish on Ethereum. Some people are bullish on Bitcoin. Some people are bearish on Bitcoin. So everyone has a different opinion. But of course, we're all here to make our own decisions. Thank you so much. I appreciate it. I'll see you all in the next one.